Welcome to Friday's Market Wrap-Up here at Wealth Creation Investing. Matthew Buckley, the Chief Investment Strategist here at WCI. And, well, you wouldn't be able to tell by looking at the stock market right now, but macroeconomic data that came out this morning, absolutely horrible. Saw some inflation indicators, core PPI and regular PPI, not that big to me right now, but retail sales imploded, and the University of Michigan consumer sentiment was the biggest miss on record. Okay, it's the first consecutive monthly drop in 14 months. Huge, absolutely huge miss, and just shows that this the quote-unquote recovery in the second half of this year is faltering. And the consumer is that canary in the coal mine, and the market, folks, is just kind of whistling past the graveyard right here. Dow is up 40-some points. The SPUs are flat. And, taking a look at the VIX, it just shows that, in my opinion, VIX is up a little bit here when I'm shooting this. But this is all confirmation to me that I believe that the taper is priced into this market. So remember that next Tuesday and Wednesday, the Fed, the FOMC meeting will conclude on Wednesday, and analysts are expecting 500-pound heads are expecting that the Fed is going to ease off the accelerator there to the tune of about $10 billion. So slow their asset purchases to about $75 billion net. And that's why the market is just kind of drifting sideways to up here. Seen a significant rally this week in the market, and it just doesn't make any sense. Now, a little bit of a relief rally, obviously, from the slapstick comedy of Laurel and Hardy, Obama and Kerry, and obviously that's a little bit of a weight off the market, but all that does is kick the can down the road, folks. Syria isn't going anywhere. Chemical weapons aren't going anywhere. If you think the guy's going to turn them over and Russia's going to oversee them, or United Nations, it's fantasy. You also believe in unicorns. So it's not like that is going away anytime soon. But as you can see, a little bit of a relief rally on that news, but we're starting to move a little bit sideways here the rest of the week. But that tells me that the taper, in my opinion, is priced in. We actually might see a buy on the news next week, unless, and here's the important point, folks, unless the Fed shocks to the up or downside, meaning the Fed comes out and says, you know what, the economy is soft, and we're going to keep our asset purchases right here at $85 billion. Well, then we have a rip-your-face-off rally. Or the Fed surprises to the downside and says, we're stopping tapering altogether, or we're ending our asset purchase altogether, or 65 or 50, whatever it is. So if we see anything surprising out of the Fed from what I just discussed, we might see a move to the up or to the downside, but this just doesn't make any sense, folks. The macroeconomic data aren't good recently, which might be another reason that the market's kind of moving higher to sideways, is that, well, maybe with all this macroeconomic data that came out, especially the jobs number, that the Fed isn't going to taper as much as expected. So, but get ready for this, folks. I mean, this is the next thing on the radar. If Syria is on the back burner and the taper might be priced in, here you go. We have the budget battle and the debt ceiling coming up here, and there's a small minority of Republicans who are going to go to the mat. Now, the House leadership, Boehner, Cantor, all those folks are trying to do a little Rodney King and can't we all get along, but there are a lot of Republican congressmen out there who are like, nope, this is it. You folded like a cheap suit on sequester and the fiscal cliff, Mr. Boehner, and it's not going to happen this time. So we might see a lot of volatility. I don't think the government shuts down. The Republicans would shoot themselves in the foot, but there are folks out there who would not. I wouldn't mind a government shutdown. We really need to burn this thing down and start with a clean piece of paper, because we are really driving off into a fiscal abyss here with entitlement spending. And great report yesterday I read out of France how they're stopping all their tax increases on the rich because it's simply not working, and they're going to look to budget cuts. Now, out of the European countries, France has been the one to kind of follow the United States model of let's tax the rich and not cut spending, and quietly, even the socialist president, Francois Hollande, is saying, you know what, this ain't working. Let's stop trying to go after the rich because we didn't get any money there. They left, and let's try and cut some spending here. So this might get a little ugly. We're probably going to see a nice uptick in volatility based on the debt ceiling and fiscal cliff, debt ceiling and budget battles. But I really don't. It's going to be theater, folks. we'll see the same thing out of Washington that we see every day. Zero leadership, and they're going to kick this can down the road again, as they always do. Okay, so get ready for next week. Make sure you tune in for Monday's Market Outlook, where we'll discuss what's going on with the Fed, and make sure you sign up for our live trading event next Friday to discuss all of this, the result of the Fed's tapering, the debt ceiling, the budget battles, and how I'm going to be trading it in the model portfolios here at Wealth Creation Investing and also over at Top Gun Options. So click on the link in this email to register for that live trading event, and I will talk to you guys next week. Happy hunting. Make sure you hedge. Have a great weekend. We'll see you.